So when you take the ensemble of data that we've gotten recently, retail sales, PPI, CPI, the jobs report on Friday, what kind of picture does that paint for you of the U.S. economy?
It's still good. It's still moving along. It's not like weakening. That I think is a key message. But I think what investors have learned now after the January jobs report is that the realized inflation, the actual inflation, is still subdued. We probably will move to the target this year at some point, but there's nothing of acceleration there. And I think this is why the yield curve again began to flatten, that there isn't much of a risk premium for accelerating inflation.
And perhaps then not as a result accelerating rate hikes. If you take a look at the Bloomberg, we have a chart of the likelihood being priced in for the Fed to raise rates either 3, 4, 2 to 4 times, I guess is what we have looking at here. And still we're seeing it priced in 3 hikes is what people are betting on this year. Is that your supposition as well? And then what does that tell you about where Treasury yields, for example, are going to go in 2018?
Right. So I think this 3 scenario versus 4, this is kind of an interesting dichotomy between the Fed and the market today. You know, the market is actually slightly ahead of the Fed in terms of its expectations. This is the first time in 5 years that we've seen this. So there is some expectation that the economy will take off further this year and meet the target on inflation, and therefore maybe need more hikes from there. The base case for many is 3. I'm in that camp too. But you cannot exclude the fact that they may have to move to 4 if the economy just stays on track, despite the sort of what you mentioned mixed bag of data, doesn't show any weakness of any kind. Hence, the Fed can, I would say, comfortably hike at least 3 times. So the market is clearly on board with that. I would think next week that the Fed will probably adjust its expectations a little bit upward to meet the market, because this is clearly different from 5 years ago.